On the program today, keep Africa united. Paul Kagame advises our incoming African Union leader. IMF staff conclude 2019 discussions with the West African Economic and Monetary Union on common policies for member countries, plus Algeria's economic growth up to 2.3% in 2018. Thank you for joining us and welcome to Business Incorporated. I'm Imana Amawe. Let's get the show started with the markets. Well, it's the last trading day of the third week of January and the positive sentiments cut across most of the major markets in Africa. Here in Nigeria, the stock exchange was up 0.47% at intraday. South Africa gained 0.50% at intraday. The Egypt SE was higher by 0.24% at its last session, while the Kenya SE was also up by a marginal 0.04% on Thursday. And in the Middle East, the markets closed for the weekend on Thursday. Abu Dhabi's stock market rose sharply, lifted by financials and Abu Dhabi Commercial Bank. The Abu Dhabi index was up 0.97%, partially lifted by a 5.3% hike in Abu Dhabi Commercial Bank. The ADCB says its board will meet next week to discuss the potential merger between the firm, Union National Bank and Al Hilal Bank. And Saudi Arabia's index fell 0.37%, with industry heavyweight Saudi Basic Industry Core slipping 2%. The Dubai index slid 0.1% as its property stocks continue to decline. And Qatar's index increased 0.58% with industries. Qatar is adding 2.6%, and Qatar Navigation also saw an uptick of 3.6%. European stocks also traded higher today on Friday, despite renewed worries over whether the US and China will resolve their trade dispute. It's the final trading day for the week. Let's talk to Conrad for updates. Hello, Conrad. It's time to wrap up the week. The German share market seems to be ending the week with another gain. All this in spite of negative economic data, Brexit looming, and a government shutdown in the United States. Where's all this optimism coming from?
Well, it's not coming from businesses. Adding to all the doom and gloom you just, alluded to today, the German IFO Institute reported about another significant drop in business climate here in Germany. The business climate index fell much stronger than what economists had predicted. The logic this has triggered here on the trading floor might sound a bit counterintuitive at first, but it goes like this. The weaker economy will make sure that interest rates in the Eurozone will remain probably low, probably much longer than anticipated up until now. The European Central Bank might also be inclined to prolong the phasing out of its quantitative easing, its monthly purchases, the reinvestment of the government bonds money that expires. This is quantitative easing, and it's probably going to last a little bit longer than a lot of analysts and people on the markets had thought so far. This is the hope that sort of makes investors go out of bonds and into stocks today. Another factor is the government shutdown in the United States, which at least has caused a few investors to pull their money out of US assets and invest it in assets from other countries such as Germany.
Several chip makers have sent out warning signals in their earnings report. And also the Intel has come out with a weaker outlook. What's the market reaction to all of this?
Well, the stock price of Intel has slumped after the news came out. It's down around about 6% here at trading in Frankfurt today. But I have to say, Intel is really an exception. If you look at a weekly scale and if you compare Intel with, on the one hand, with on the other hand, Texas Instruments, SK Hynix, and also ST Microelectronics, all those chip makers reported their earnings this week, and all of those reports were relatively weak, and the outlooks were very hesitant. But Intel is the only share that on a weekly scale is on the downside at the moment. Texas Instrument, ST Microelectronics, and Hynix all are up. The logic behind this is that, more and more investors are convinced that eventually there'll be a rebound, that this is the time after, last year, during a couple of months, those shares have significantly lost. Now is the time to buy, because eventually, semiconductors will really be in great demand again. See, here in Germany, for example, the auction for the new 5G mobile phone standard is starting today. It's expected to last a couple of days. After the state sells those licenses, the mobile operators will start, building the infrastructure for this new 5G standard. And this is only one technology trend where semiconductors are really in demand.
Oh, well, Conrad, I hope you'll be buying into some of those stocks. He said now is the time to buy. But also, it's that time of the week again when we say, thank God it's Friday. What do we expect in the coming week? What events and what data will drive trading in Frankfurt?
Well, here in Germany, of course, this 5G auction will be in focus very much, as well as a number of earnings reports. SAP, Deutsche Bank, for example, coming out with their quarterly earnings reports. And what's even more important, with an outlook on the year 2019. Also, other companies, Philips, Amazon, Apple, Facebook, are among the large corporations coming out with their earnings. In terms of politics, well, China's Vice Premier Liu He will travel to Washington next week with a delegation in order to, discuss trade with the Americans. So those talks will be lifted on a higher level of the administration. This week, we've heard a couple of contradictory statements from the U.S. administration. Wilbur Ross, the Treasury Secretary, saying that the U.S. and China are still far away from the deal. Steve Mnuchin, a bit more optimistic. We'll have to wait and see who's the better predictor.
All right, thank you, Conrad Bosen at the Frankfurt Stock Exchange.